My name is Lindsay Lehr. If you're new here, welcome to the PCMI Payments Industry Coffee Chat series. We hold these meetings once a month to provide a space for our network to come together, to hear from different speakers, to discuss different facets of the industry, and hopefully, have a communal learning experience on, the future of digital payments in Latin America, but increasingly around the world as well. So we're thrilled to have you with us. Just a couple guidelines to ensure a successful coffee chat today. Please keep in mind, if you just go ahead, keep in mind that this is not a typical webinar. Okay, we do have some presentation slides, but we expect and hope that you guys will help create this session, making it very interactive and open. We want to hear your questions as well as your own insights and anecdotes and input to what we're discussing. So to manage that, a couple of things to keep in mind. You're welcome to jump into the conversation at any time. We'd love for you to have your microphones open, your cameras on, and then you can jump in using the chat. You can raise your hand. You can simply jump in whenever you feel there's a moment to do so, and we'll make sure we get you in and get you into the conversation. So please don't be shy. This is recorded. So keep that in mind in terms of your comments. There may be competitors, investors, journalists, etc. in the room. So just keep that in mind. And this is recorded and posted to our YouTube channel after the event. So please just keep that in mind as you're participating. Okay. Going ahead. I'm really excited to welcome René Salazar from Stripe. René is a longtime friend from the industry, wearing many hats throughout the time I've known René. And we have a very kind of exciting discussion with René today. So welcome, René. Thank you so much for joining us.
Thank you, Lindsay.
So guys, what we're going to talk about today, I was inspired to invite Stripe. Of course, all of us know Stripe as an innovative fintech globally and in Latin America, building payments for the internet. But I had the privilege of attending Stripe sessions earlier this year in San Francisco. I don't know if anyone else in the room attended that, but I think it was your second time doing it, right, René?
It's actually the third one, but it's the largest one.
Okay, the largest one. And I was telling René just before this segment, I was so blown away by this conference. I've been to Money 2020, I've been to many other industry events, and what you guys did was strike this fascinating balance between telling your customers and partners in the industry about Stripe, your product innovations, your vision, and just inspiring the attendees to do better, to solve new problems, to partner in new ways, and to really envision the future of payments. So I was personally very inspired. I attend events all over the world. I thought it was so well done. And my primary question was, this is fantastic. You guys are doing so much. You're solving so many new problems. How is this relating to Latin America? How much of this is going to be deployed in Latin America? And what are the specific challenges you all are experiencing in LATAM? And how much are these trends valid for our region? So we invited René, who's perfectly positioned to help us answer these questions, head of financial partnerships, because Stripe more and more is just dedicated to, you guys do what you do through partnerships. So thought that was fantastic. So we invited René to join us, and I'll go ahead and we'll stop sharing and let René share your screen because you have a bunch of slides to share with us. So René's going to take us through a deck. There are a lot of slides, but again, this is meant to be a conversation. So please do, guys, jump in. I'm going to be jumping in with questions because we're probably, it's in my opinion, a visionary message and, talking about what's to come. So with that, I'll pause. René, if you just want to give us a little bit of your background and then take it away.
Yep. So hi, everybody. My name is René Salazar. I'm the head of partnerships and global expansion for Latin American Stripe. I've been working in payments my whole life. So that's super interesting for me. Like I started a small startup in an issuing business, then jumped to PayPal for 6 years. And then I was leading fintech for Walmart. So very exciting times for payments and fintech overall. I think most of us all here are payments geeks. So, very excited to share with you guys what we have at Stripe. And when we were chatting with Lindsay about what opportunities we have in Latin America and which trends we're seeing, I think marketplaces is something that has been growing a lot. And I'm gonna share with you very quickly like what we're watching or what we're seeing from Stripe, but also it applies a lot to the industry. Surprisingly, not everything is payments, but a lot tends to relate to payments. So let me tell you a little bit about why we see that marketplaces are important, because now it is a way for a lot of sellers and nascent e-commerce businesses to start getting into internet economy. They don't need to build everything by themselves, but of course the marketplace that they're partnered with or the marketplace that they select is very important when it comes to the operation of a new e-commerce business. So when we talk normally about marketplaces, everyone thinks about, oh, there's like checkout payments, that's it, probably fraud. But we see it as a more complex thing. There are things that are related to how do you verify your merchant, your buyer, what happens with the dashboard, what is the user experience, when do you pay out? Taxes are becoming very more complex in every single jurisdiction where our merchants operate. Some of them want to go to the card present world. So it is a very complex environment. And there are many players that are starting to work on improving these experiences for their sellers. And this is basically because what we see is that a lot of the sellers are now cross-listing across different marketplaces. So when you are a marketplace, you're really competing for that seller and you're really competing for that buy. So you may have tons of articles in your marketplace, but in reality, it's really a competition with several different marketplaces. And and at the end, what we see is that a lot of the value that sellers place on a particular marketplace tends and is related to payments. So with that, we started thinking like how to improve the seller experience, but also the marketplace experience.
René, I have a question here because I love this stat. 55% of sellers would switch marketplaces for faster payments, or 70% use more than one marketplace, because we do a lot of research for clients where we're interviewing sellers. And there's always this question alluding to this data. But my question is, what's the habit of sellers? I mean, don't clearly it says, 70% use more than one marketplace. Are marketplaces truly in competition with each other? Or is it more that sellers list their products wherever they can and they're trying to be ubiquitous wherever consumers are? Is there true competition between marketplaces? Do you know what I mean?
I think it depends on the niche where the seller is actually selling. But so basically, I mean, you have a lot of people that are now sell professionally, like secondhand goods. So those
Right.
guys likely cross list because they want to improve their chances of selling. But what is really interesting is that there are a lot of marketplaces that are very niched. And probably they don't compete with our marketplaces, but they want to have a good user experience, because it's not only that they're competing against the marketplace, they're also competing against the own seller going independent. So you want to at some point you want to have a captive seller that is very comfortable with the product that you have, with the user experience, with the payments, with fraud, with the whole ecosystem that is within the whole experience, the end-to-end experience, not only of the seller, but also from the buyer point of view.
I like that. So your marketplaces are also, especially niche marketplaces, are competing with the seller going independent and competing against them.
Yeah,
Direct.
I mean,
Yeah.
and it might be something that is natural. So we see that there are some merchants that say like, yeah, I want to start selling through a marketplace, and at some point they will reach a scale and a point where it is better to be independent. But there are also some marketplaces that say like, I want to improve the value proposition to my seller. What else can I give them?
Right. And then a follow-up question to that is, so you have sellers who are selling on more than one marketplace. As you said, some of them might be secondhand goods. Are sellers running into the issue where, and is this a solution that you might be working on where, oh, I only have a limited stock and I can't over-index, I can't oversell my product, like airlines, right? They have to manage, or hotel rooms have to manage their inventory. If you're selling on multiple marketplaces, that might get complicated to manage your inventory and your stock. Is that a challenge that you're seeing?
I would say it's a challenge, but it's also an opportunity for like core platforms that enable sellers to manage their inventory. So, and we see that a lot in travel, especially. Like there might be hotels and small boutique hotels that they need to manage their hotel room inventory across platforms, and you don't want to sell the same night twice, right? So they have really found very interesting platforms that allow them to have this experience connected to platforms that are also connected to Stripe or also to their own Stripe's platform, for example.
Got it. Okay, cool.
So and I think that was my second point. You know, like we're chatting about marketplaces, and we normally go with the typical examples, like you know, the eBays and the Mercado Libres, stuff like that. But what we're seeing now is that there are many companies that probably most of us have never heard of that are a marketplace. And today, like Stripe powers around 70% of these marketplaces. But what I want to tell you today is forget about the name. Just think more about the industries that are behind it. And this is what we're seeing in Latam. So a couple of weeks ago, we announced a partnership with Construrama that is a marketplace for construction. Like no one would thought about that. We're seeing a lot of marketplaces on the events, ticketing platforms, hotels, even restaurants. One of our top customers in the marketplace segment in Mexico is a restaurant. And when you start looking at what they do, like they're selling their seats in different platforms, they get used to becoming a marketplace. Schools, fitness, gyms, there are many opportunities for industries to become a marketplace and to think as a marketplace, because it really allows them to scale and to have more places where they can sell.
Okay, so let's go back to that restaurant example. Can you explain that a little bit more? How does that work for a restaurant?
So they have a reservation engine.
Uh-huh.
They have one table at 9 o'clock. Their restaurant table is cross-listed in different marketplaces.
Oh,
So
okay.
people are able to book that restaurant table in different, like it can be at an airline partner program, it can be directly at the restaurant, it can be at the restaurant portal that they have. So there are many marketplaces now that are catering to restaurants. And they say you want to have dinner in Mexico City, and that would be a way for you to take a reservation on that specific restaurant.
Got it.
So I have a question on this, because this is fascinating, because I never went that next step. I was always thinking that like a marketplace is going to sellers and they're saying, sell through us because these are our customers. And so they're basically selling access to customers. So as a seller, you join multiple marketplaces to get access to more people. But now you're presenting this thing, which is like, okay, well, you might have a marketplace that is focused on construction. Well, that's really interesting, because now it's not just a matter of you accessing the customer. The customer is on different marketplaces looking for different things in different places. They might not see your sales pitch in one marketplace because they're not looking for it there, but they will see it in another one. Am I getting that right? Or am I missing something?
Yeah, I think like there's a transition from the marketplaces that were selling their buyer base as a value, as a whole value, to this becomes a platform that is giving you more powerful tools than just telling you, I have so many million active users that are a potential customer for you. So there's a transition. Yeah, I mean, the ones that have the buyers, they will have a network effect. The buyers will probably have an easier buying experience, but it's not the whole thing that there is out there for a marketplace. Like if you're a seller trying to look for a marketplace, yeah, probably if someone tells you I have 20 million customers, it's gonna be appealing for you. But things have gone so specific and so specialized in the recent years that now you're not prioritizing for number of potential customers. You're really prioritizing for who can give you a better experience, who can solve all your backend your backend problems, who can really give you tools to grow in a very complex scenario, like I will show you in a couple of slides.
You said something at the beginning, René, that I think touches on, you said helping marketplaces and by extension, their sellers better and more easily participate in the internet economy, right? Just providing that suite of services that help them sell online faster and more easily.
Yeah, so I think it's time to market, but also allowing them to have an experience that really they can control. I mean, if you want to control that experience, if you really are like super picky on what type of payment methods, on how invasive you are when it comes to fraud, what type of product do you show, then it makes sense to have a very strong platform that no one sees in a way than being a very like public marketplaces. At the end, each business is different, and you may want to balance like having a super like B2C type of marketplace versus a B2B type of marketplace.
Mhm.
So what we're saying, so that mean marketplace at the beginning, they were like, yeah, I want to sell, give me a payments, pay me whenever I need to be paid, and that's it. Now we're seeing that marketplaces want to go global, and their sellers want to go global. It can be a regional expansion, but at the end of they are not comfortable staying at the same place where they are today. And now with so many competition, not only among different marketplaces, but also within the sellers, they want to have value-added services that typically a marketplace wouldn't be able to sell. So you're talking about how do we instant payout? Some of them are going like omni-channel, so they would like to have a single experience. They want working capital loans. That there are many tools that different companies can provide them. And if everything is embedded within the marketplace solution, then there's like this larger network effect for them to be able like to really get married with a specific marketplace solution. So what do we see in Stripe that we are solving for? Basically, there are 5 things that we solve. One is conversion. And conversion, we mean onboarding of the sellers to accepting all the payments that they need. Fraud, I mean, we know that we're operating in markets where fraud is a big problem, not only from the buyer point of view, but also we need to protect the marketplaces from having fraudulent sellers. Onboarding and having good merchant experience is also critical for having good sellers within the ecosystem, so that whenever they start exploring on our marketplaces, they really have this strong link with the marketplace. Operating within compliance is also critical, and like I said, like managing payouts in a way that it's seamless for the sellers, it's important. And basically the way that we do it is through a very simple approach. What we saw is that many marketplaces, they want to do a lot of this, but it's a large investment. It's a very complex investment. So most of them would say like, yeah, I don't care if it's Stripe branded. I'd rather use your solution and have everything live as soon as possible than build it by myself. There are some that they may say, hey, probably not. I want to have an embedded solution, but I want my look and feel. Yeah, we can do that. And there are also some marketplaces that they're using our APIs to build their marketplaces on top of us. Just thinking about the onboarding, the full complexities that operating a marketplace has. And so let me deep dive on these 5 things. I think onboarding is critical, and most marketplaces miss this. I had an experience probably 6 months ago with a very large marketplace that was asking me to create an account with a financial institution to be onboarded in a marketplace. And they said like, it's gonna take you 2 days to be onboarded, and you need to submit copies of your passport and a bunch of things. And I'm a casual seller. There's no way I'm gonna do it. And I was like, yeah, I'm gonna do it for the fun of it and because I work in this industry and I want to understand it. But if you start thinking how many sellers they're losing because having these like probably yes strong controls but very bad customer experiences is really interesting. So when we talk
before you go on, let me ask you a question, because the focus here is on marketplaces, right? You're onboarding sellers and you're creating all of these solutions for marketplaces for their pay-ins and their payouts. Is there a reason that the focus is on marketplaces and not just online merchants in general? That's part 1 of my question. And part 2 is, how much do you observe the trend that traditional retailers like Palacio de Hierro or whatever, Walmart, is incorporating a marketplace model into their own website?
I think that the first question is a little bit of both. So yes, there's definitely we sell to marketplaces because when you see like how specialized they are and how niche they're being created now, it really makes sense to give them tools to grow so they can focus on like the particular industry where they're working on, like travel or like the gyms. Like when I was reading and seeing these marketplaces that are operating gyms, it's just amazing how different it looks on the surface. But when you start digging up, it's just a marketplace. And yes, I think there's this second push for like retailers to have like the extended catalog, I think they call it, where you have different sellers onboarding to it. It's a good way of getting incremental revenue. As a buyer, then I really struggle to get the what is the value that I'm getting. Yeah, I mean, probably you get more SKUs that you're able to browse in the same place. But things get tricky when you are like, you have a warranty issue and you go to the retailer and they say, no, I didn't sell it. It was a
Right.
third party.
And the consumer doesn't know or care, right?
Yeah, so
They
now
just know what website sold them the product and they're going to look for solutions, right?
and the consumer will say like, I bought it from you, and they will say, no, you didn't. So I think it's a matter of like, it's incremental revenue for them because they have millions of customers in our markets. Retailers have a very large consumer base. But on the other side, like I was saying, you need to balance the user experience with what you're really doing. So at the end, it might not fit for everyone, but some of them, like it might be a useful way of getting to millions of customers and to start selling and start scaling.
Got it.
So when we talk about onboarding, I think what we look at is basically how do we help the marketplaces increase the conversion? And increasing the conversion is really getting merchants that start onboarding to be able to onboard successfully and have their first transaction, to not have any problems with risk, with fraud models. How do you take the marketplaces become compliant? Because you can imagine that whenever you're having these thousands of data points from sellers all across the world, it is a very complex scenario. And third, how do we give them the tools to go global? I mean, we're not saying you need to go global from day one, but most likely when you're implementing a very sound solution like the one that we have developed for the marketplaces, it's very easy for them to say like, I want to go and open a new market. And that's the key point, because they don't want, as a marketplace, and especially the ones that are niche, they don't want to recreate or rebuild their platform every single time that they're expanding to a new market. So let me give you an example of the onboarding. Like an onboarding is now the most complex part. You have these huge onboarding flows that they ask you for many things that normally you wouldn't be considering. And we're looking here at like 3 types of information. One is that like the information that you ask from the seller. If it's like the example that I had a couple of months ago where they were asking me for a ton of information for a pair of sneakers that I was selling. So you don't want to have a very invasive approach. You want to be compliant on the other hand. You want to be able to check a lot of information from the devices, the IP, like you want to have a risk scenario based on the seller. And lastly, we also manage like a lot of the cross-reference checks on the usual suspects like FATCA, like blacklist and all of the stuff that are globally. So onboarding is key to having a very secure marketplace, but it's also very important to understand that you can manage this super secure marketplace with a good user experience. And now everyone thought about marketplaces in payments, right? So I don't know, 10 years ago, it was easier. We didn't have a lot of payment methods. It was cards plus probably 1 or 2 local payment methods in Latam. Everyone's talking about Oxxo and Boleto. Now it's more complex than that. And our job is basically helping the marketplaces understand which payment methods make sense or not for their business. Like they're gonna be payment methods that are gonna be reaching the marketplace and say like, I'm the new payment method, I'm the most valuable one, you need to integrate with me, you need to have a good customer experience with me. Some of them are not cheap. So I mean, it really is a very, very interesting decision for the marketplace. So what we help the marketplace is, one, have all the relevant payment methods. And I think there's a big emphasis on relevant, because these need to be the ones that their buyers or potential buyers use. And 2, how do you make it scalable in a way where you don't need to integrate with every single payment method that is supported across the time? And when you think about the payment method, it's not just the payment method. You need to recreate a bunch of things behind the scenes. So you need to think, what is the interface of the buyer? Does this payment method allow to be a carton file type, or do they allow recurring transactions? Do I need to ask for two-factor authentication? Do I need to take care about fraud? What happens with disputes? This is a private dispute. This is a network-related dispute. There are many, many things that every single time that you enable a payment method, you need to think about. So enabling a new payment method becomes a very large and complex project for a marketplace if they want to do it by themselves. What we did.
René, this is very central to a lot of things that we help our clients understand. Can you talk to us about trends you're observing in Brazil and Mexico with respect to payment methods, right? Which ones are up and coming, which ones are fading out? Are there differences between industries? What can you kind of share with us just from your experience?
I think I wouldn't say there's a winner or loser, but it is becoming more complex.
Mm-hmm.
So when we met with a merchant, or in Stripe we call it, when we meet an user, like they would say like, oh, I had a meeting with this particular payment method and they claim to have all these value props. Is it real? Would you guys be able to offer it? And I think our job is help them discover if it makes sense or not for their business. And in reality, this is not like a one size fits all. We've had a lot of surprises. One of the recent surprises that we had at Stripe was with Apple Pay. Like we were pushing a particular merchant, like, hey, what about Apple Pay? And they would say like, no one uses Apple. Like the market share of Apple, of iOS devices is super low. And then, I mean, it's really in Stripe is really a very simple experiment. Let's turn it on. Nothing, I mean, if it doesn't work, it doesn't work. They turned it on and it became a huge success. And it's, it really amazes me how all out of nowhere, like they have these biases against some particular payment methods, or the payment method would say like, yes, I have millions of consumers using me. We need to help them like discern between like the good ones and the bad ones for their business, but also make them in a way that it's scalable for them. Like, I don't know, in my previous lives, integrating new payment methods was probably a multi-year project. Now with how fast-paced the market is, you cannot really afford wasting.
Sure. Oh yeah, and by the time there'll be 5 more payment methods that you didn't even think of by that time.
Yeah, that this is really what's happening. So I mean, probably you're saying, should I invest more in Pix? Or is Pix gonna eat our payment methods? We don't know, but that's where you need to really balance the investments that you're making with like this magic ball that is probably gonna predict the future and the consumer trends and behaviors of the next probably 5 years.
And what do you think determines, so that example about Apple Pay, right? What determines whether or not a payment method is relevant for that company? Is it the age of their customers? Is it socioeconomic level? Is it the industry vertical? What do you think are the primary levers?
A little bit of everything. Yeah, like, I mean, this particular company has very low AOV. So normally you would say like, yeah, more premium devices, more premium credit cards or something, it's gonna tend to higher AOVs. It's just probably just a user experience thing. And that you're able to present the relevant payment methods where it makes sense. And that's something where we invested a lot. And this is just like very stupid scenario, but basically what we did was to build the logic behind every single payment method that we have. So that whenever that you have a buyer, you present the relevant payment methods that they need, and not like a whole list of payment methods that probably they're not aware of. And because I think this one is super important. Yes, integrating new payment methods is complex, but the real complexity is how you create those payment methods in a way that is scalable and user-friendly with your checkout experience. You don't want to show Google Pay to an iOS device. So basically what we do is we have all of the payment methods that Stripe supports, and we balance them with a good user experience so that whenever a user sees a particular payment method in the checkout, we know based in our own rules that they have a likelihood of using that payment
Yeah.
method.
Is there a number like too many payment methods leads to confusion? Do you advise like guidelines? Oh, you don't want to have more than 10 payment methods or more than 8, or is there a guideline?
We tend to keep it very, very dynamic, and this is basically what our checkout looks today. So if you look here at the experience on the left, like we present 3 payment methods. We present Apple Pay. I mean, this was a particular example of an iOS purchase. We present Link. The Link is our own solution for.
This is in the US, I guess.
Yeah, this is a US experience.
Okay.
And we present PayPal.
Yeah.
So at the end, we will show you the ones that are relevant to you. And of course, it's going to be credit card. But also, it's important to understand that you have the ability to test. And that's something pretty cool that we announced this year. Like all of the merchants, all of the marketplaces that are operating with Stripe, they have the ability to program A/B testing from their Stripe dashboard. There's no longer like, hey, I need to code, what is my control population, all that. No, everything can happen using like a user-friendly interface. So again, there's no one size fits all, but what we want to encourage is our marketplaces and our sellers to be able to really experiment and try to see if a particular payment method makes sense or not. We will show some, but of course the other part is like allowing them to like this is the part on the center, like allowing them to understand which payment methods make sense based on their geography, the average ticket, whatever they're selling. Like they need to really push that sale very hard.
Just an observation here. In these examples, I know this is just an example, it doesn't mean anything necessarily, but all of the payment methods that are visible here, well, I do see cards now here, but almost all of them are some type of wallet or, some type of environment that's not just the payment method in and of itself. So you have cards and it's like this little gray thing. There's no brand. And then there's all these brands, these wallets. We just put together a deck that looking at WorldPay's global payments report, and it really shows that wallets in their many types and facets represent over 50% of global e-commerce volume. And as opposed to, even though Apple Pay, when you click on Apple Pay, it's a card payment in almost every case. It's just cards are becoming antiquated. Cards in and of itself is becoming antiquated, and you start to see these different brands that might include a card as the rail. So a question that we've started to ask, and I think the industry really needs to start to answer is, what drives loyalty to these wallets? What drives usage of these different user experiences, essentially? So it's just an observation from stuff that we've been studying.
Yeah, or not. Like I think in the card present scenario, it's also like amazing how you see like cards is no longer a thing. Like everyone's talking about payment credentials, and payment credentials is the wearable device, your cell phone, a selfie. Like, so I think that it really relates to the speed and efficiency that you want in a checkout.
Yeah.
And this is probably a trend that you see more in LATAM with the BNPLs now, that you are then directed to a new checkout where you're basically taking out a loan. So it's so I mean it adds friction, it adds time to the checkout flow, but at the end you want to have a very simple user experience. And that's basically what we're trying to balance. Like, yeah, number of payment methods, having everything in a single place. And the third one, the ones that are probably a pop-up that will send you to an outside environment, how do you make it in a very easy way?
Yeah.
And this is our data. So the ones that are using this type of like checkout flow, they are increasing in average like 10.5% their revenues. So basically by making the external payment methods public here in the top, managing in a very easy way that the consumer information, billing, shipping address, shipping methods, and all the stuff, and then dynamically changing the other payment methods that you see. Now, you were saying about cards. Yeah, I mean, here we show, in this example, we show cards after pay affirm Klarna, but in Mexico can be OXXO, we can show Pix in Brazil. So this part of having these dynamic elements help a lot on increasing the performance of the marketplaces, but also the conversion rates that we see.
So Renee, sorry, what does payment element refer to specifically?
So we these four like squares with the different payment methods, they are all dynamic. So I mean,
Okay.
if you are a Mexican, I mean, there's no reason for me to show you Afterpay. I will show you
Right.
auction. If you
Yeah.
are Brazilian, I will show you Pix. So what I want to do is in this literally screen that I have as an opportunity to close the sale, I want to show you the payment methods that are relevant for you.
And relevant depending on country as well as device type.
Yeah, it's super dynamic. Can be country,
Okay.
device, currency, geolocation.
Okay.
So there are many things that determine what payment method we show to the consumer at the end.
Got it. So 10% average increase in revenue after migrating to payment elements. So that just speaks to the importance of the dynamism of payment methods. Okay, got it.
And it's that dynamism, but also the importance of having a one-stop shop.
Yeah.
Like not needing to create the super complex rules behind it that basically allow you to really change the payment methods, the allocation, even the colors of the checkout. So then we talk about payouts, and the typical way of payouts are like, I'm gonna go to the bank, but payouts are getting more complex because now a lot of marketplaces are selling as a value prop the timing of the payouts. So they're no longer saying like, hey, I'm gonna pay you, I'm gonna deduct my fee. No, they're gonna say like, I'm gonna pay you and I'm gonna pay you instantly if you sell more than X amount with me. I'm gonna pay you to wallets if you only have a bank account. If you want to use a credit card, yeah, I can pay you to a card directly. And this is becoming a very important part for the seller experience. So I think this is a result of the gig economy being so big now. Like the sellers having high expectations on the marketplace. So that means that they as a marketplace, now you need to think about the payouts as well. And what we did in the recent years, we announced that we're covering 118 markets among cards, banks, wallets, pretty much of everything. So that marketplaces can have consistent user experience whenever you're doing the payouts as well. And I was saying about the user experience on payouts being important. What we also are helping marketplaces do is have this user experience embedded within the marketplace. I mean, if you think about the more traditional marketplaces, they will say like, no, you need to go to my payouts and payments provider, like whatever company that I'm partnering with, and they will let you know what's happening with your marketplace. Now marketplaces, they don't want to have a bad user experience. So we're allowing them to embed all the financial information, pay-ins, payouts, recon, reporting, all that stuff within the marketplace. And that way, it increases the loyalty and the retention that the seller has with the own marketplace.
So I have to continue to remind myself, the flow, because you guys are providing these services to marketplaces, but the services is for the seller. So pay out to the seller. I have to continue to, remember the flow that we're talking about. So just in case that's helpful for anyone. And so same question, Renee, we talked about the trends in pay-ins. In Brazil and Mexico, what are the trends you're seeing in payouts in terms of payment methods? How much are instant payments being a differentiator? What can you tell us about the trends?
I think payment methods are stable enough. We have two great products in Pix and Spay. So the payment is I wouldn't say it's a problem. It's more on the time that it takes for a marketplace to pay the sellers. And then, I mean, if you're a marketplace, it's not just about paying you on time. There's also this fraud and risk scenario that they need to balance. And this is a game of balancing like risks and balancing payment methods and balancing good user experiences. So what they're doing a lot is just trying to understand what makes more sense for the customer, for the seller. And at the end, try to pay as soon as possible, but without like opening the floodgates to potential fraud and chargebacks and all that stuff.
Okay, so it's not so much the payment rail in Latin America; it's more the balance between risk and
yeah, because I mean, there might be. I don't know, I met merchants that sell on marketplaces, and they will say like, "Oh, I get paid every 30 days." It's a long time. And they will start complaining.
Yeah.
And then you're like, okay, what is the best that you want? Like instant. Okay, some of them you may have a risk score and try to pay next day near instant or something like that. But I mean, again, there's no one size fits all. So you cannot pay everyone in 30 days. You're gonna lose a customer. You need to be able to balance a good user experience to pay as soon as possible, because now a lot of like the marketplaces have going back to the gig economy, these people sell for a living. So they cannot wait 30 days for like the purchase of the sale, the proceeds of a sneaker sale or something like that. They need to really receive the payout as soon as possible because that's how they eat. So it's really changing the way how marketplaces conceive sellers as well.
And a question, Renee, I think you're pointing to something that whenever I talk to clients about payouts, the focus is I think too often and exclusively on the payment. So I dispatch the funds and it settles in 24 hours or it settles instantly. But that's only one part of actually getting your money because you have to depend on their marketplace to release the funds. When they say I only get paid every 30 days, the payment doesn't take 30 days to settle. It takes the company 30 days to validate that this was a good transaction, that the money is really there, and then release the money. Right? So, and that's a risk question that they're grappling with, right? The payment rail is not always the main factor.
Yeah, I mean, and the 30 days is completely arbitrarily. So that
Right.
I think that's where it gets more interesting because, I mean, it doesn't mean that you're not gonna get a dispute in day 31. So there shouldn't be a scenario where like everyone.
That's very true. Yeah.
Everyone is risky or like that's where you need to be very smart as a marketplace. You cannot treat all your sellers as a potential risky customer. You need to be able to balance the good user experience. And at the end, I would say like you see this gig economy, the players here in Mexico, like all the guys that are driving bikes across the city, like they will wear different hats. And when you chat with them and they're like, yeah, whoever pays me more and faster, that's the one that I will use. I work with all the platforms, yes, but at the end, there's a value that they perceive on the ones that have a better user experience. It's not gonna be the same for a brand new seller in a marketplace that is selling smartphones that no one knows about where he's getting them and stuff like that. So a risk-based approach is very important when you have a marketplace and you want to balance good user experience.
So I have a question on that because this is a really important one, obviously, in my area as well. When you have a marketplace that sellers are selling through, does the marketplace itself take a level of responsibility for guaranteeing the products and services provided by their sellers?
No, I think at the end, I mean, there are different ways to treat it. What we try to get into is to have the seller of the marketplace be the liable party. So they are, in our eyes, they are the merchant. So it's easier for us to have more control on who's doing what, who's selling what, and also like if there's any problem, you're able to isolate this probably bad apple, or you're able to isolate the problem where you do more research on it. And if you need to establish like limitations or something on a particular seller, you don't want to affect the whole marketplace for one particular merchant that probably doesn't understand the rules, or that is not shipping in the right time, or that is not following the network rules. So it really becomes a balancing game on how do you isolate the problem? How do you understand where the risk is in the whole value chain of like from the onboarding of the seller to like the payout, and doing in a way that is efficient with your customers.
Okay, so is that you taking on some of that, or is that mostly the marketplace taking on that responsibility?
Both. So at the end, we give them the tools. We operate, we're an acquiring some markets, we're a PayFac, so we need to be compliant with the networks, with our own partners. So we tend to look a lot on what's happening below us, but we also tend to give the marketplace the tools for them to see it, because at the end, our risk approach might be different than the one that the marketplace may have. And that's something that we provide to them. So let me just go quickly here. They are able to look at what's going on within the marketplace. So they will be able to see like, hey, we have this particular seller. Can you please take a look at it and make sure that they're selling what they say? Their average transaction doesn't make sense with what we're seeing on the market. So we give them the tools to be able to have this back office management, not only in fraud, but in any single problem that the sellers may have. And there's two questions.
So you get involved in the dispute resolution as well.
Yeah. So we receive the dispute from the networks. We present it to the seller through the marketplace. the marketplace has all the solution for them to be able to present it within their marketplace dashboard. They don't need to come to Stripe to be able to represent the dispute. But at the end, like it flows through us. We're not like we give them the platform, but we also are part of the transactional flow.
Got it. So I want to ask Eric to ask his questions. He threw a couple in the chat. So Eric, do you want to jump in?
Yeah, happy to do so, and thanks, Lindsay. So René, interesting one from a seller's perspective. I was thinking about, does the Stripe platform and all this, what you're suggesting, allow sellers to expand internationally? And if so, how? Is there a simple way of saying, well, we work across multiple countries and we're able to offer local currency? Or if from a regulated entity there, does Stripe say, don't worry, we will collect funds on your behalf as a merchant of record, for example, in the case of there's a service, not a physical selling shoes. There, wanted to see how you can help sellers expand across Latin America.
So today we don't operate as a merchant of record. So normally what these marketplaces would do, it would be more of a technical solution. And from the transaction point of view, the seller would be receiving a transaction cross-border. So let's say, I mean, this happens a lot in the travel industry, where you are gonna receive payments from all across the world. That transaction is not gonna be local in where the buyer is located. It's gonna be a cross-border transaction, most of the time paid with cards or with any other wallet. I think, and this really helps also us be compliant, because at the end, this is an international transaction, but also the marketplace, because the marketplace is out of the funds flow. They can manage rules for them to be able to trigger when the seller gets paid. And like when we're saying about the 30 days, like payout, I mean, that this is something that the marketplace can program, and they can say like, yeah, I feel comfortable with this transaction. I'm gonna pay out in 16 days, in 15 days, or whatever. This is something that they control, but they're out the funds flow. And I see Miriam's question, they're like about being aggregators, and that's the big difference. The marketplace is not part of the funds flow, and that makes them compliant with network rules, with domestic rules, because they don't want to be cataloged as a PayFac. They want to be just a marketplace, but be able to control the payout experience, the user experience, the money flow. And that's basically the big part of our solution. How do you seem to control all that without touching the funds?
Got it. Thank you, René.
So I mean, payouts was important, like I said, and this is everything that something that the merchant can see. And lastly, we help the marketplaces grow. So what growing, it means basically giving them tools to be able to understand how to sell more. And this is like some solution that we have. We have billing, that is our recurring solution. It is a very dynamic product. So this is completely machine learning. It's not your typical grand pass experience of like recurring payments, like where you say like, I'm gonna retry this transaction every X time. This is something where we really put a lot of effort on understanding what are the chances that a particular transaction has of growing, of being approved if it was declined the first time. And a good example is that we partner with a lot of companies and giving them this solution so that we retry on their behalf. And they don't need to create, again, the logic. Like we were saying with the payment methods, you don't need to create a logic behind when do you retry. We're gonna do the retry on behalf of the marketplace, on behalf of the merchant, and try to recover as much as possible sales for the marketplace and the seller. And lastly, about marketplace management. So over the last 20 minutes, we explored onboarding, payment methods, payouts, and operating efficiently a marketplace. So the way that we see it is like, we don't want you to lose revenue. We don't want you to lose customers. We don't want you to be flagged as a non-compliant entity. And we want you to have a good user experience. So we invest a lot on the probably more soft part of being compliant, being a legal company, like having good fraud and risk rules, but also our platform is super stable. And what we mean, you can literally go and Google this, but our uptime is 99.9999%. On Cyber Monday and Black Friday, it goes to 6 nights. So we invest a lot on the platform being as stable as possible, because we know a lot of our users on our marketplaces really depend on this platform being super robust for their business. And at the end, they need to manage the marketplace. So managing the marketplace becomes a thing that they can do really without using a Stripe on a day-to-day, but using a Stripe for every single part of the transaction. And that way they're able to really invest more time on growing the marketplace brand, on growing the marketplace solution, and not think about all the complexities behind payments and everything else that happens around the industry. And yeah, at the end, reporting is super critical. So one thing where we invest a lot, reporting not just to the marketplace, but also to the seller. And that way it's very easy for them to directly look at what is going on with the transactions, with the payouts, with transactions that are successful, with payment methods. So we give a lot of insights both to the marketplace and to the seller, to the point where they can now create SQL queries directly in natural language. Like they can say, like, tell me how many sales do I have with Pix at this particular time, and our platform will give it to them. So we're investing a lot in giving them these resources for them to be able to grow their platform, and also focus more on the value that the marketplace has without thinking about all these complexities behind the scenes.
Mm-hmm.
And that's it from my side. I don't know if anyone has any question.
René, I wanted you to focus on or speak to one area which I think is one of the most interesting things I got out of sessions, and you had it on an earlier slide, is helping convert. Like the third step is like helping marketplaces turn payments from a cost center into a revenue driver, which is essentially fintech as a service, right? And so how can you talk about that? I think that's a very fascinating
I think, avoiding the tag of fintech as a service, that it's more like embedded finance, stuff like that. We want to give, I'd say, marketplaces and their sellers all the tools that they need. And normally when people get into this, and it's very interesting, when you talk to sellers, it's just like, I want to sell, I want to go online and start selling without knowing what's happening behind the scenes. And it can be so hard. Like, I still need to explain Pix to people outside Brazil. And this is super important because we are in this, like, in our own world where we think that everyone knows what's happening. And imagine that you need now to explain Apple Pay to a seller they're not familiar with, BNPLs. So what we're doing is like, just stop thinking on, I need to keep throwing dollars to creating new platforms and recon and adding new payment methods. We're gonna do everything for you. So you think that your first investment, your first and probably only investment, was implementing our marketplace solution, so that whenever we add something new, it's already there for you. And that's the way that it becomes like less a cost, more of a long-term investment. And this is good for the sellers, because at the end, the seller doesn't even know that we're behind the scenes.
Mm-hmm. So can you maybe tab back to one of your first slides? It was like showed 3 phases, because I totally get like making things simple and keep going. Is in the first section of I think right here. Yeah. So what you just spoke to, I think, is Marketplace 1.0, and then expansion globally. And now Marketplace 3.0, now you're providing financial services. You're enabling the marketplace to provide financial services, right? Am I understanding that right?
Yeah, so this happens in markets where, 1, we have those products available, and 2, we don't do it ourselves. So in the particular case, let's say the issuing part, which is enabling the marketplaces to issue credit cards. We enable the platform, but we are not the issuer of the credit cards. We have a partner bank that is the one that issues. So yes, at the end, we give access to these financial services, but it's not Stripe. It is a partner that we have that is a regulated entity. And that's why we want to remain as like more infrastructure, more technical than anything else.
Yeah. I think this is, in Stripe sessions, there's a whole section on embedded finance and how monetizing payments enables companies in more specialized niches to grow their revenue exponentially. And it speaks to the fact that, okay, you start off as a marketplace, but eventually payments could be a huge part of your business. Like if you watch the trajectory of Mercado Libre, right? Mercado Pago has become more than 50% of their business. So I think this alludes to the power of how there's still so much room to grow in financial service innovation, and that how anyone can become a fintech, and you guys are just pointing to that in different stages of development in different markets. But I thought that was a very exciting trend that you guys pointed to.
Yeah, I think that that's the best way to put it. And probably the most important one for my job is like, we don't build it ourselves. So we partner a lot with companies that know how to do this, that have the right licenses, that really know the market. Because at the end, we want to give good service, not only to our customer, but to our customer's customer.
Exactly. Yeah. Putting together those jigsaw puzzle pieces. And perfect. So René, thank you. We just have about 3 to 4 minutes left. Are there any final like calls to action or final thoughts you would want to share with the audience as we close out?
I think marketplace is super, super important to understand. And the more you dig into it, it's less complex than it seems. So I would encourage everyone like to really, really invest in as you can in marketplaces. And I mean, there are a long, strong companies in Latin America. And I see like Eric has a question there.
Sorry to interrupt. Hi, René. Hi, everyone. Good to see you here, man. Just one quick question. We used to be part of this complete solution of marketplace of Stripe, but we needed to stop using Stripe because by the time that you are adding like the billing, the settlement, the connected accounts, I don't know if it's still the same, but it turns to end up in a merchant discount rate really, really high for the end merchant. So we needed to stop using Stripe because we started with like 3.6%, but by the time that you are in like radar for fraud detection, for this and this and this, it ends up with a really high merchant discount rate that even though, as Lindsay was saying, we didn't try like to get a cut of the merchant discount rate. We were just like translating the merchant discount rate to the merchant. The merchant immediately, in our case, that is a micro and small business, is like rejected immediately because they have like other alternatives that probably they don't work as well as Stripe, and they don't have the technology that Stripe has, but the cost is just too much. I don't know if it's still the same. It's something, you're doing something about it.
I think that's where we tend to outgrow the regulation. And the big problem with Mexico and the high cost is that as PayFacs, we are expensive. And I know Miriam is here. Like, I think this is our daily battle as a PayFac in Mexico, is that we're just too expensive, and there's no efficient way for us to be able to say, I'm gonna give you the interchange rate of the industry without having a scalable way. Like, I mean, imagine if you're a marketplace and you're selling NGOs or hospitals, like very low interchange rates. The process is super time-consuming, manual. Now you need to ask for a ton of documents that don't make sense. So I think we're just probably collateral damage of a big pain that we are facing as an industry. And the second part is just like, we try to put our product as a software service platform. So not all of our users will use us for example, for anti-fraud. They will have solutions like ClearSale, Signified, or some other solution. So that's why our pricing is on demand based on how many products you're using out of the Stripe platform.
Mm-hmm. So several months ago, we had a discussion about the regulation in Mexico and different actors working to getting more preferential interchange for different MCCs. And so I think you're speaking to some of the regulatory barriers that the whole industry faces. Another thing is, that's interesting is, really thinking about the needs of larger companies versus smaller companies and making, getting the right product fit match to the company that you're working with, because as companies grow, they need more sophisticated solutions, and they're going to be more willing to invest in these technologies and things like that. So great point, Eric. Thank you for bringing that up. So guys, we're just about out of time. I think this is a fantastic discussion, and I encourage you guys to reach out to René with additional questions. Thank you, René, for sharing. I'm very impressed, and yeah, thank you. Yeah, Miriam, pointing to what I was saying earlier. Thank you. So anyway, thank you, René, for sharing with us, for being so generous with your time and your insights. And we look forward to more discussions. And guys, we'll be back here on September 9th. So thank you, everyone. Have a great week ahead, and we'll be in touch very soon.